everyone? It's Wells Only, and this is an impromptu stream. Just been thinking a lot about staking lately and staking strategies and whatnot. So this is gonna be just me talking about staking. We'll give people some time to get into the stream, chat, whatever. Give them some time. There's only 10 people here right now. This is last minute, so let's let the folks catch up on Twitter. Let me see if I can let them know I am live. Let's see. So, people always ask, like, what's the best way to go about staking and stuff like that. And, I always like to say it's very dependent on what you want, right? Because only we know what we want ultimately from the market. And we already kind of understand, well, at least if we don't, we're about to today. We're about to understand why, understanding that when you exit, you're exiting, right? And that's an opportunity cost that you have to weigh out at a specific point in time, because price is always doing the same thing, and that's going up and to the right. And that's strictly because of the logarithmic nature of the returns for HEX. And if you're not familiar with that, I'll kind of go into it a little bit, but please go into watch my first ever video, how cryptos work, the network effect, because I explain it there really well. And that's kind of what you want, right? You kind of want to be able to understand kind of what you're doing, right? And that's important, because making the right decision is key, especially when it comes to finances, right? Because we understand that, at least I like to think people understand that, HEX is really a one-way street in a lot of cases. And one way in the sense that, once you get into HEX, you're kind of understanding that it's a one-way trade, right? And it's a one-way in the right way. And that's unique. We're not really used to that. We're used to usually things sucking, right? Whoops. And that's important to distinguish here, because when it comes to HEX, it's unique in the sense that it doesn't have to suck, right? So what do I mean by that? Because I talk about that a lot, but I don't think I'm very clear about that, and it's kind of embedded in the title of what I'm talking about. And that, is critical, because understanding what we're doing when we're making financial decisions is important, right? If you've been to college, I'm sure you've been on that side of the line where you have to sign a promissory note and you don't really understand what you're signing. You just know you need that money to go to the semester, or to start the semester, excuse me. And that's pretty much it, right? You're not really giving it any thought. And that's fine, that's how it is. There's nothing wrong with that. But the whole thing about it is that you should understand what you're doing, if nothing else, right? And that's kind of the whole point of having this conversation. A lot of people don't understand why staking is better than trading. I know I personally do, so hopefully I can highlight those important aspects of why, because the why is what matters, right? It's very easy to just presume something, because people always seem to have like a negative aspect with regards to certain things. But you have to understand that some people just have experience that you need and you just don't have, right? And there's nothing wrong with that. It's just a matter of recognizing that. I think that's really the key, right? Because that's a function of maturity. Um, okay. So what I did here was I put essentially a staking ladder, right? And these are the years for each, right? And what we're gonna do is we're just gonna play around with the data, play around with what it looks like on this histogram. And then we're gonna alternate between what we're looking at here and what we're talking about here and what we have here, right? Because understanding like all of these three things, along with maybe a few other charts, are important. Because again, it's about making a mathematical decision. It's very important to understand this is a mathematical decision because we already know this is programmable money, right? So that means that when I highlight something that it does mathematically, there's no reason to question it. That's just what it's doing, right? And I've said it pretty much since I first streamed, and it's been the case that that's clearly what's going on, right? So what that means is it's not that I'm right because it has nothing to do with me. It's just a simple fact that we have the empirical evidence, right, showing just to really bring home what I'm trying to say. And today is the 630th day, all right, per go.hex.com, that the system has been in existence, right? And this is what we're talking about. Exactly, precisely. Okay, we have 629 data points, literally. It's loading, give it a second. There we go. 630, right? 629 full data points. Okay. Daily payout, total shares, the yield on that daily payout as a function of those total shares, what that gain is on a daily basis, and what that daily gain yields on a yearly basis. All right. This is systemic information, right? This is not something that, I don't know, you can just make up, for example. Um, This is the blockchain because this is what Hex is designed to do. So anytime people enter the system and they stake Hex, what's happening is that this number increases. Okay, very straightforward. Once you're buying Hex and you're staking it, you're swapping out your Hex for T shares, right? This is why understanding the T share rate is so important, right? Now we threw in 100,000 Hex there, right? So let's talk about that 100,000 Hex. What does that number mean to the system? And actually, geez, we're only 10 minutes in. Let me say what's up to the chat. I'm being very rude. Excuse them all, folks. I just have this topic on my mind, and it's burning a hole in my brain, and I guess I just need to get it out. So why not orally? So let's say what up to everybody in the chat. First off, thank you guys for joining me on a Monday. It is 6:30 Eastern Standard. I typically don't stream at this time. I figure with Pulse launching, people getting stakes doubled and liquid bags doubled and all of that, probably be a good idea for all the new entrants into Hex and whoever else to just get a good idea of how the majority of Hexicans view staking. Not that I speak for all, but I speak for those that know to a certain extent. And that's okay because we're just sharing our personal opinion with respect to this mathematical information. And that's what it's about. It's not about opinions, it's about math, right? And here we have a T-share rate, right? Now, where does this T-share rate come from? Well, that T-share rate simply comes from dividing the dollar cost of a T-share And now let's get to the chart that shows both. We're dividing the dollar cost of a T-share by the dollar cost of 10,000 hex. Now, what does that look like? 3513. Now, these data points are a couple of days old. 1886. All right, equals. All right, so we're getting a T-share rate of 1.86267. Okay, so that's 18,600 and yada yada. However, the system is saying this is the T-share rate. Now, why is that? Right? Because that's essentially a spread. Right, and I'm actually working on a chart to highlight that because that's actually important information. Because at some point in the future, it's going to actually come a point where this value. Now, the way this works is that I know I told you guys these numbers, right? Now, how does that number, how do we take these values, right? Put them in a calculator, get these numbers, and then this is supposedly the rate. Well, you have to understand that systemically, the rate for the T-share rate system is a base of 10,000. So that means whatever the value is from here has to get multiplied by 10,000. That's actually in the tech specs. So if you're not familiar with the layman's guide, let's take you there so you can get familiar. This is important information because this is about how the system works. And you have to understand how the system works, right? Otherwise, you're just listening to other people and what they tell you. And that's not the best way to go about life, especially when it comes to financial stuff. Here we go. I think this is it. Is it it? Yes. Share price. So this is where you will find this information. Okay. So let's see if it details it here. Where is it? All right, let's see. Give me a second, guys. I just want to make sure I find this information so you guys know where to find it. Here we go. So this is basically the same thing, right? Looks like I'm getting close to the formula. Nope. Basic flow, yada yada. Well, as you guys can see, it's somewhere in here. So that's like the whole point. So go to this document, search through it, read it. It's important to understand. Let's see, does it not highlight the T-share rate? Yeah, it does. Share rate. But does it highlight it specifically? I don't think this is the paper where it highlights it the way I saw it. It had to have been the actual white paper. So I'll actually write a little something on that just to make it thorough. But understand that the base rate for the system when it started, and we can actually see this by going to HEX.dailystats.com. Actually, it was 10,000, and we'll see that shortly. Because it's important to understand these things. Otherwise, I wouldn't be wasting the time trying to find it. All right, so here we have the T-share rate. What I'm going to do is I'm going to sort by date. And what we're going to see is that the T-share rate starts at 10,001. Oh, thank you, Cash Plus. Appreciate the the super chat, brother. Appreciate that. Thank you very much, man. But again, so it's about understanding where this rate comes from, right? So we're taking those dollar values, right? The T-share dollar cost divided by the dollar cost of 10,000 hex, and this is what gives us the actual T-share rate. But given that the base rate is always 10,000 hex, as dictated by the system since day one. That implies that we need to multiply that rate of 1.867 yada yada, 1.86267 by the 10,000. Okay. So with that, we get the T-share rate. Oh, actually, let me throw this in here through the link to the layman's guide in the chat. But if you can find the actual white paper, read that. Because in my opinion, that's better than reading the layman's guide. That's just me. All right. So that's where the T-share rate comes from, right? So now we kind of have a solid understanding of that. So as of now, we have 18,493 hex per T-share that is required, right? So now we know we're starting with a bag of 100,000 hex. Okay, this is what this means. Total hex, 100,000. So the main thing I'm going to start with trying to impart that people understand is that what matters is when you start your stakes, not when they end. Now, what does that mean? Well, when you have, let's say you only have 100,000 hex to stake, and today's the day that you have to stake it all. You see, with 100,000, you get 5.4 T shares as a base rate, right? Meaning if you add 10 days, it'll go up a little bit, but that's for the 100,000 hex. But here's the thing: even if you break each 100,000, or if you break the 100,000 and 10,000 stakes, you're still going to get that same base rate, just as a divided by 10, right? And it was 5.4, and it got divided by 10. See? So the point is, when you start your stakes, right, whether they're multiple, right? Oh wow, I didn't know that. How about that? Thanks for that comment. The stake ID of the first stake to increase the share rate was 6,660. It's interesting because the system doesn't show that, but that's definitely how the math works. So I'm not sure why that's the case. But maybe we'll figure it out one day. We got nothing but time. So here we have the 10,000 for the base rate. So maybe that 6,000 was from back in this point in time. Not necessarily sure. I tried to find data on the first, like on back in the day stake IDs, but even trying to get it through Etherscan, it was kind of difficult to do. Because you can only go back but so far. All right, so you got 10,000 hex, and now we know that whether it's 10,000, 100,000, or a million, the T-share rate is going to be divided by that 0, right? So if we got a million hex, you're going to get 54 T-shares. 100,000, sorry, if we got 100,000, then you're down to 5.4. If you're down to 10,000, you're down to 0.54, right? Straightforward. So let's say you want to make a bunch of different stakes, right? Question is, well, how do you fill out your calendar, right? A lot of people struggle with that. I struggle with it. I took the approach where I wanted to backload my calendar because my whole idea was I need to get these diamonds, as many as I can, as quickly as possible, and get them as cheaply as possible, right? So what do I mean? Well, when I came in the system, getting 100,000 hex was nothing. It wasn't much of a feat. I think you probably could have done that with maybe $500. Like it really wasn't anything crazy. So let's say, we see the system gives us 5.4 T-shares, right, for no days. Now, let's say we want to max our stake, right? Well, a lot of people might know that the max bonus payouts that the system gives is at 3641 in terms of days, right? Now, what does this mean? Well, what this means is that once you put in a 10-year time frame in the staking system, what it means is that you cannot get any more T-shares, allotted to you from the system. Doesn't mean anything else. Hope that's clear. So when you go 5,555 days, still getting the same quantity of T-shares. It's great. But of course we would want more. But the question becomes, well, why do we care about sacrificing that much more time, right? Which is a significant amount of days, almost a little over, almost 2,000. You're right, 1,914 days. Why do we want to sacrifice 1,914 days, right? I plan to cover all of that as well as all of the in-between in the stream, because understanding that first is the most powerful thing if you're new to Hex, right? Because of course we know that there's a max, there's a limit. There's always a limit to most systems, but the question is, why do we care? Well, if you're getting to Hex now and you're only in this is basically like almost the start of year 2. So that means that if you're doing a 15-year stake, you're going to be getting out at year 17, which is like, what does that mean, right? Who cares? Well, we're going to get into that because that's very important to understand. Excuse me, I have to drink some water. And it's one of those things that, nobody really thought about it until the question was raised this morning about why is it not late to get into Hex? And then I really started thinking about like the mathematical aspect of it, because that's what's natural. And I realized that, those inflation walls, the main inflation walls that are tied to those 2 points in time, 10 years and 15 years from the start of the staking ladder, right? Like if we go to HEX.VISION and we look at those walls, you guys are going to see what I'm talking about shortly. Give the site a minute to load up here. And if you're new to Hex, please check out my scrolling ticker along the bottom. Never expose or share your private keys or seed phrase. I'm basically saying the same thing 2 different ways. Please be careful with your security. It's very important. And if you didn't know, I have a website now, wealthonline.com. So yeah. All right. So let's check out the staking wall. And this is what I'm talking about right here. So here we have year 10. Okay. Because the system started back here, right? Like December 2020. So year 10 is going to be December 2030. All right. Pretty straightforward. And that's why you have all these stakes ending around this time, right? People catching the 10-year. So what's going to happen is the T-share rate, we already know how it works, right? It's a function of the end staking. Okay. Actually, let's go back to the layman's guide. I think they do a good job of describing the T-share rate here and how it works, actually. No. Yeah, here it is, I think. About calculation and interest. Does it do it? No. Damn, I really gotta find the other one. Hold on. Let's see. In order to ensure longer and larger stakes pay better over time, there's a pricing mechanism built into the contract. Every time a stake is ended, the gains for that stake are calculated in the form of a share price, which all future stakers will pay to convert their HEX into shares. An important note here is that HEX's base unit is the heart. Hearts are to HEX as Satoshis are to Bitcoin. There are 100 million hearts per HEX. So I'm reading all this because it's important. Bear with me. The share price at launch will be 1 share per heart. So there we go. The way price moves is related to return on investment for a stake. For example, If on day 5 someone ends their stake and has a 20% gain, it translates to a share price of approximately 1.2 hearts per share. 20%, 1.2. That can't be a coincidence. If that user wishes to stake again, their hearts will be divided by 1.2 to determine their number of shares. Since Ethereum only supports integer math, this is accomplished by using a scalar, which is listed below. So what's a scalar? All right, let's look that up because I know that's an uncommon term. So let's look that up. Okay. So while this is very far, excuse me, the important thing to understand is that this scalar, right, is an element of a field used to define a vector space. Now, this is the key here. A vector space, right? That's kind of the giveaway. Because what this is doing is basically lining up the T-share to go in a specific way, right? And every time you do that calculation, that T-share count is always going to scale down. So the vector is pointing downward. Vector space is downward. So that's basically why this is a scalar, right? It's really just this whole formula is capping it, and it's pointing in one direction, right? And that's the whole point. That one direction in which it's pointing it is causing the T-share rate to constantly point upward, right? And this is what this is showing. Even from the initial point in time, the base rate was 10,000, right? Every time somebody ended a stake, that stake got scaled based on their return, right? So if you had a 60% return, seems like your scaling is going to be 1.6 with respect to that T-share count, right? So that's important to understand. If you have 100 T-share stake and it's coming out and your ROI is, let's say, 50%, then it seems like, according to what this is saying, you're only going to be able to recapture 66.66 T-shares. So it's crazy, right? This is the type of thing that is kind of hard to understand. But when we're talking about stakes and stuff, like, you know, uh, understanding that is important, right? Understanding what happens at the end of a stake is important. Understanding what happens with the T-share rate is important. Why it's always going up over time is important, right? Why it looks like this is important. So we've gone over a couple of things. We've gone over how the T-share rate is calculated, right? Where it comes from, how it started, the base rate, it being 10,000 hex, right? And even though when we divide these numbers, we get essentially a single digit real value, meaning 1.86, whatever that value was. 3513 divided by 1866. There you go. 1886 gave us a base rate of 1.862. So then when we come in, 10,000, right? And boom, there's your T-share rate. But that's forward looking. And we'll talk about that at some point in the future. Let's worry about the present for now. Because that's going to, again, become an important calculation in the future. Because, well, we'll get into it. That's some future date. Actually, all right, let's stop real quick. 30 minutes in. Got about an hour left before I got to cut this short because then Joe goes on. Let me just say what's up to everybody in the chat. Oh, Molly, what's going on, brother? Shout out to everybody in the chat, all about Hex RTS. Thank you guys for coming through. I'm Metal. I've never seen you before. Welcome aboard. Crypto Learner, what's going on? Hex Toshi, Dr. Hexotomy, what's up? Ash, was good. Yeah, I wish, right? I wish. What's going on, Nardo? Zuela Theta was good. Peace out for Moynac 6, whatever your name is. Can't pronounce that. Bearded Saint, nice name. Tell me what's going on. What's going on? Fake reported government. Well, all right. For the next 2 years, it doesn't really matter much because they've always been fake and they're always going to be fake as long as, we continue to allow the fake to persist. So let's talk about a lot of the things that are going on nowadays because I've talked about this before, but just to spend a minute on it. It's very important that people understand that what is happening now is clearly a function of what we tolerate. Period. No group of individuals are strong enough to tell you what to do. It doesn't matter how big their army is. That's a fact. And I was in the army. So you take that one to your grave with you because I know exactly how it works. You don't just think you can tell a population what to do when it's unlawful and completely against basic human rights. Period. So if we allow fake data, it's because if there exists fake data, it's because we allow it. So the question is actually what's wrong with us for allowing it? Thank you for your question. Hope my answer makes sense. Because and I'm all crypto. I don't really care about CPI and none of that. All of that stuff is fake. We know it's fake. And that's the reason why Hex looks the way it does. Because it's designed to crush that fake shit. That's really it. And it's all a function of the T-share rate, right? And we already know how the T-share rate is designed, right, to always go up over time, right? Because it reduces the rate of T-shares you're able to acquire via the scalar, right, which is basically this formula here. Because what's happening is that once you end that stake, the system is recalibrating based on the time you've been in the system, the quantity of hex you have, because that's all going to be a function of your return, right? All of it. Because the earlier you got in, the bigger your bag is going to be, the bigger your ROI, the bigger your divisor, right? Because that's just how it's working. So the less T-shares you're going to be able to recoup on the next iteration. But that's simply because when you're an early adopter, right, the system is going to reward you in ways that you can't fathom, right? But then when everybody else is entering into the system, they then have to essentially let time do the work for them, right? Now, how does that happen? Well, it's kind of like this, right? And we're going to kind of dissect this a little bit. But let's talk about the T-share rate some more, right? So now we know how the T-share rate recalibrates over time and why it always goes up. That's a function of people actually using the system, right? So people actually buying Hex, staking it, and that stake then being ended and not just being left in the system to bleed out, right? Those are two different things, okay? Two different things. So now let's look at what happens over time when the price of Hex reacts to this reality. Because what I hadn't figured out, which is important to highlight, and maybe you guys will understand this after I explain it, and besides just looking at it, is that the system had to figure out how to catch up to its value, right? Because this is the payout per T-share sum line, which is linear, because it's just a straight up discrete value, commutative sum, right? Where we're just accounting for all the interest being paid every day, right? Every single day we get paid and we account for that. What's up, David? Morales, hope you doing well, brother. All about the Hex. Hiroshi, shout out to you. Jay, everything was good. Big boy games going on. So, okay. This is not necessarily true because if there's less of a T-share count, that means there's just less shares in the system, meaning the system is actually going to pay out less. So it's still going to do the same division, right? In order for the payout to actually be greater, the system has to have less participants in it with the same number of shares. That's the only way that the T-share rate can go up. So, yeah. Dorito was good. Crypto Games Club, what's up? John Ness, what's going on? Marcavelli, shout out to you, my brother. Brand, I know you in here somewhere. Roscoe was good. Fix DSM, what's up? Sir Hex a lot, what's going on? Janewell369, shout out to you. Bala, Lost Legacy was good. Cash Plus, thanks again for the super chat, bro. Croco, thanks a lot, man, for coming through. Appreciate the kind words, brother. Yeah. Mark, man, what's going on? Thank you for the pleasurable comment, brother. Lawrence, thank you for tuning in, man. MWSR, thank you for tuning in as well. Steve Johnson, thank you for tuning in. Hex Machina, thanks for tuning in, brother. Mad Mike Bradley was good this week through Jefe. Jose Cuervo, thank you for showing up. Barbara, what's going on, man? Hope you guys are doing good. What's going on, boy? No one else simplifies comic. All right, man. Appreciate that. I'm glad that video is coming in handy, even though it's long as all hell. Oh, shit. Yo, now that's funny because we damn well know that's not true. Yeah, and that's why we're here. We're here to talk about the free money. We're here to talk about the free money. You know what I'm saying? So it's all about. Dagron, what's going on, brother? Hope you're doing well. Harold J, what's going on, man? Shout out to you. All right. I think that's everybody. Now we can get back to the nitty gritty. How much pulse per hex? We don't know yet, man. We'll figure it out once the chain launches. If you have any inside info on that, let me know. I'd like to know. Anyone in here from the U.S. looking to get the... Yeah, don't worry about it, man. They got a long way to go before they even get to Australia levels over here. So, frankly, that shit would never happen here. There's just so many guns. So good luck to them trying to figure that out. Because there's a reason in the U.S. they have to psyop the fuck out of people. Right? There's a reason they've had to dumb down the population over time. Very, 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 very simple reason. Right? So let's remember that. Shout out to you, Tony. Thank you for tuning in, brother. Crypto Journeyman, what's up, homie? Hope you're doing well. All right. So let's get back to the nitty gritty. Hope everybody's enjoying what we're talking about so far. A little water break. And again, it's a very simple thing. For those with the vocabulary on hand, when you're talking about a productive asset, that means that it's something that generates cash flow or some type of value to some degree. And this orange line is literally a representation of that for Hex. Okay? Now, interestingly enough, what we know of Hex is that it's similar to Bitcoin in the sense that the proof of weight, which is this orange line as well, is the same as Bitcoin's hash power, right? And over time, the difficulty does increase. And guess what? Just like the payout per T-share line goes up over time because you're acquiring more Hex as time passes, right? We can also see that the difficulty to acquire a T-share goes up over time, right? This is the same thing as the hash rate, literally. Okay? Now, this line is just literally the value, the intrinsic value representation of what that T-share rate is doing per T-share. Does that make sense? Please let me know if that makes sense because I really want to make sure I lock down the strategies and how I'm going to explain them because you guys got to understand that when you get off this train, you're getting off for good, right? And then when you recapture those T-shares, it's going to be expensive, right? And it's going to be based on your ROI. So like for me, I already know I'm screwed. I was doing the calculations on my stakes already. And just in fiat terms, there's already multiple X's across the board. So, it's really imperative that you guys understand these concepts because I really want to make sure you guys are making the right decision when it comes time to actually initiate your stakes if you don't have any. Give me a second. Or if you're looking to initiate stakes, right? Whether short or long, it doesn't matter. You just need to understand what you're doing, right? Because, again, staking is a function of two things: time how long you're staking it, as well as how much you're staking, right? So let's not forget that. Very, very important. Very important. All right. So I'm getting yes. Yes. It looks like everybody's understanding what's going on. What up, Nate J? Thank you for tuning in, brother. Smell Tony in the chat and not doing his duty. Shout out to him. So he just joined. What's going on, Mel? So yeah, here we have literal physical representation of what price is doing with respect to the proof of weight in this proof of staking system that we call HEX, right? This is a literal graphical representation. Now, why? Well, the price is logarithmic. We have proof of that. Going all the way, yes, even here, actually, we can prove it. And if you know the log, all right, so let's go to the log base 2 values. Log 2 values, because it's fun to, and this is, again, it goes back to my first video. Logarithmic, logarithm. Goes back to my first video, how do cryptos function? Or, yeah, how do cryptos function? No, I thought I said calculus. What's wrong with me? Because that's what it's all about. It's about understanding. All right, let me just look up 2 values. It's easier to look it up that way. There we go. So, all right. Yeah, there we go. Okay. So, log base 2, right? Log base 2 of each exponent that you're seeing here, okay? An exponent is the number that's superscript on the 2. Because what's happening is that log base 2 of this number up here is yielding these values, okay? So what we're going to do now is we're going to go back and look at the price of HEX post big payday, and we're going to see that HEX is stopping along all of these values, which is interesting because if this wasn't math and code, it wouldn't do that. Or maybe it's just how markets work, and you just need to go back and watch my video because that seems to be the case. So here we got, right, price down here looking like it's 60, right? Maybe it's 80. Right, then it stops again at 120, which is like 12, right? Let's see, 16, right? Close enough. 16, 32, 64, 128. So maybe it's a representation of 128 instead of 120, right? Completely feasible. Then we got 256 up here, so it's just doubling, right? 256, 512, right? Right above 480, right? Then what's after 512? 1024. Which is right here. And look, it's stopping and pausing at all these values. 1024, then is what? 2048. And then where does it stop? Right above 1920. Are you guys catching on? So this is what HEX does. So essentially, you can expect it to continue to try to climb higher until we get to 4096 because, or I'm sorry, 2048 because we just tapped 1024, pause there, right? 1024, pause there. Now we're on our way to, oh, we already did 2048. So we're on our way to 4096. Because that's just how it moves. 12 doubling. That's where we're at. We're on our way. Double, 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 right? Yeah, guys are tired of hearing Richard say it all the time. And this is what we're talking about, right? And this is proof in the pudding, right? And it even shows us, Excel gives us the proof via the data, which the system is generating via this power T-shares trend line. Okay. And that's what this line is showing. So in layman's terms, think of it like this. Anytime you buy HEX, you stake it, you're getting on the train. Okay. The train ride is only as successful as how long you stay riding it. Okay. The less you stay on it, the less money you make. The longer you stay on it, the more money you make. That's it. Simple as that. Okay? Simple as that. That's simple. So you get on, like, for example, I got on the train ride here because this is around the time that I started buying Hex right here, right before Big Payday. So my ride has a long way to go. Okay, so when I got into Hex, Hex still wasn't at 10,000 in terms of its indexed return or its indexed value. It was still below 10,000 when I entered Hex, and I wasn't tracking this at the time, but that's just what it was. And now we're all the way at 86, 88,000. Phenomenal, right? And this is the train ride I'm talking about. However long you stay on, that's as good as the ride's going to be. Okay? So now we understand the T-share rate, okay? How it derives its value, where it came from, how it continues ratcheting higher. We got that. We got how price tracks the actual intrinsic value of that T-share rate, which is the payout per T-share, right? Which is what the T-share rate is there to do, right? Which is pay out the staker class, because that's how we sustain the system. That's how the network maintains its value, right? That's how we continue to party hard and make all this money and in unbelievable quantities, because people just don't get it. I mean, the unit bias is so crazy that OGs still can't wrap their head around it, and it's real, you know. And shout out to them, because that sudden wealth syndrome is crazy, right? I mean, you got to realize a lot of these guys were just getting by last year, maybe streaming about Hex or not. A lot of these guys are now retired. Shout out to them. Some of them are probably in this chat right now. Motley was in here earlier. Maybe he's still there. So he's one of them. Brand, another one, right? And it's about understanding what's going on. And I don't know if Maddie's still watching, but Maddie's the expert in that department, right? He's the expert. We have a resident mental health expert in the community that does stream specifically on this topic. So this is very, very important. Very important, because it changes your life. It gives you optionality. And a lot of times optionality is bad for people because they don't know what to do. And unless you have intention, you'll get lost, right? And you don't have a focus and things like that. That's why it's important to talk about a lot of those different things, like the why, right? What value are you trying to add to the world, right? Like, what is it? What motivates you, basically? Those are important topics. Important topics. Important topics. Yeah, man. Yeah, man. You got to be locked in. You got to be locked in. It's easy to get lost. It's easy to get lost because, look, you've hit the jackpot. It's on you what you do with it. It doesn't matter when you get into Hex. You're now seeing that this train ride is what it is, right? So we might not go vertical, but we sure hell are going to go up exponentially. I'll take that. I don't know about you guys, but I'll take that. So the system, what is it doing daily? Okay. What it's doing daily is that it's generating this daily payout. Now, where does this daily payout come from? Well, the daily payout comes from the total T-shares in the system. Now, where do the T-shares come from? The T-shares come from someone buying Hex, taking that Hex, coming to here saying, hey, I want to stake that Hex for 100 days, 1,000 days, and they say, hey, you get 8.375 T-shares. Great, they stake it. So now they're getting their 8.375 T-shares per day, right? But what's actually happening is that every day they're getting X number of Hex, right? Now, the average T-share rate right around now is about 582, really. If you want to be, recent, like the past 20, 30 days. About 5.82 or so. So that's guaranteeing you 48 Hex daily, okay, for this scenario, which is 100,000 Hex at 1,000 days, right? 48 Hex a day, which this kind of sounds like a lot. But all you have to do is multiply by that, and that's your return, right? In hex terms. The question is we don't know what that's going to look in fiat terms, right? But that's all right because at the end of the day, it doesn't really matter. How'd that even happen? Huh. What matters is that we're accounting for something of value. Okay, that's what matters. And now, as long as we understand that the T shares are not there forever, right? Because that's one thing that Maddie himself really made a big impression on the community with respect to the fact that we all know we have T shares, but we don't all consciously think of the fact that we're losing them every day, right? So that really has really gotten my mind working on the fact that yeah, I have all these T shares 15 years out, but what about the T shares in between? Because I'm gonna need to have something to throw out after that point in time. Like I'm really gonna need that. And I didn't think of that. And this is kind of backwards, right? Okay. So a T-share, and if you didn't watch yesterday's stream, please go back and watch it. It's I did a stream on Discord Syndicate where me and Axis talked about digital scarcity, right? And what it means. Because people have a hard time wrapping their head around the fact that digital scarcity is real. And in the case of Hex, the T-share only lasts 15 years max. This is the max you can stake Hex. If you try to do 5,556, it tells you that the max is only 5,555 days. Okay, so that means a T-share, whether it's 1 or 100,000 T-shares, only lasts you 15 years. 15.2 years, right? Whatever 5,555 days is in annual terms, right? That's all. After that, the system is going to rescale your T-share count and it's going to reduce you to whatever number it reduces you to based on whatever you had and the gains you had in the system. So if you're just tuning in now, we're already an hour in, so rewind because I'm not going to waste everybody's time. You guys just got to get caught up. Sorry, not being rude, but let's just be respectful. So we're at determining where the daily payout comes from, right? And we tracked it back to the T-share rate, which is what makes up the total T-share count, which when we take out how many T-shares are in the system and how many participants for those T-shares, that's going to generate the actual payout. And then the system is going to yield its actual payout per T-share. Okay? Because as you guys can see, while we do have a somewhat lower bound, you do have some spikes around here and there. And those spikes are a function of good accounting penalties or lack of good accounting penalties and emergency end stake penalties. All right, those are the two functions that pay us a little bit more over time. And we've seen it a whole lot, recently. If you were staked, about mid-July, I mean, there was a period of time where the payout was greater than 6 hex daily. And I'm going to be honest, I'm spoiled from that point in time. And it's okay. Hopefully we'll see it again at higher prices. And that's all right. But if you didn't catch yesterday's stream about digital scarcity on Discord Syndicate Network, please do, because that's a good one that you want to catch. Okay, back to this. So now we understand how we get T-shares. T-shares come from how the system recalibrates T-shares, how the system measures your T-shares when you're about to stake, right? That was like the first thing we talked about. I know that was a while ago, but I want to finally get to the strategy portion, but you guys need to understand all these topics until we get there. The strategy portion shouldn't be that long. It's just a function of understanding these basic concepts because they're very important. Without these concepts, strategies are pointless because you don't know what you're strategizing on. Very important we understand that. So now we can get to the strategy portion, right? We have all of the tools that we need, all the weapons that we need in our armory to now get to the point where we can set up some stakes and try to make sense of it all, right? So for example, I have the majority, I mean, I'm probably say like 95% of my stakes are 15 years. So now I have all of this time frame to fill out, because guess what? I didn't account for the fact that even though I have all these T-shares out here, how am I going to recapture, how am I going to maintain my T-share position across time, right? Outside of just holding liquid hex for now, right? How am I setting myself up for success after that 15-year point in time towards the end? Like, that's important. We don't account for that. So let's take a look at what this staking ladder would look like. Let's see, stakes. Okay. Let's see if this will work. I haven't done one of these in a while, so bear with me. Nope, that's not working. Let me see if I can make it work. Give me a second, guys. No. Nope, no. Well, I guess that's good enough, but that's not really what I'm looking for. I don't think that histogram is going to give me what I want either. Yeah, it's not. It's going to be a biatch. Yeah, I forget what I have to do with the code here. So let's go with the column. All right, good enough. So let's put just something here just to see if this can track anything. Okay. So just make believe these. Nah, you know what? Let me not do that. So we have gaps in our calendar, right? Or in our ladder, excuse me, staking ladder. We have gaps in our staking ladder. So the question is, what are we doing with these gaps? Or does our staking ladder even make sense how we have it laid out, right? Because as of now, we know for 100 hex, because here's the thing. The one thing I want to highlight is that when you start a staking ladder, right? Now I know it's hard to say this, but just bear with me. The importance of time and when you start a stake, right? I think it's important that if you're going to do a staking ladder and you're doing it across time, it's because you're staking at every point in time when you're buying. Now, what do I mean? You get paid, you take your fee out, you convert it to hex, and you stake that hex. Versus accumulating, say, 100,000 hex to then set up a staking ladder. Now, the question is why? Well, in my mind, it doesn't make it right. It doesn't make it right. But in my mind, starting with the same T-share rate while you're losing out T-shares over time, you're still guaranteeing, you're still positioning yourself at a better rate, right? So what does that mean? Imagine if you did a bunch of 10,000 hex T-share, a bunch of 10,000 hex stakes, right? But over time, that T-share rate was ratcheting up, ratcheting up, ratcheting up, ratcheting up, ratcheting up. So at one point, maybe you got 1.7 T-shares, but now it's down to 1.62, right? So you got all these little stakes here, 1.6, 1.7, 1.6, 1. All the way 1.6 to 1.7, right? Which is fine. But why not just go for the straight 16 shot, boom? Because then you got all these little stakes coming out all these little different points in time. Now, on Pulse Chain is not going to be an issue. So maybe I'm speaking from an antiquated point of view. Something to consider, because I hadn't really thought about that. So maybe that whole point is null and void. So fair enough. So then the question then ultimately becomes, well, why are we staking 100,000 like this, right? Why don't we take this out, make that, now hold on, give me a second. Just because I want to give myself a check. Come on. Oh, I know why. Give me a second, guys. All right. Okay. So I just want to give myself a check. Just give me a second. Okay. So so let's just say we don't want to do 10,000 for 1 year. Let's say we want to take those 10,000 and move it out to year 3. Right. Let's say we want to front load and back load our staking ladder versus just doing something equivalent across the board. Right. The question is, why would we want to do that? Well, it's a function of what you expect, really, right? Like, what do you think is going to happen? Because that's a good question. It's always about what you think, because ultimately, that's how you make a lot of decisions. It's based on what you think, because you think you know something, but the question is, do you really? Right? And that's always a good question, because we always have data that we don't always see, right? That we don't take into account. And this is what's been kind of keeping me thinking about, why do you do different type of staking strategies outside of the max, which is the optimal, right? And it's really just a lifestyle choice, right? And what you think makes sense for you, right? Because again, when we come back to HEX.VISION and we look at what the future holds for the data, we already know what's going to happen once this big wall is terminated. All these stakes end, right? We literally just went through that. So we know that once all of these shares expire, right, the system is going to take into account all of that ROI. And that ROI is going to probably be greater than 1. Well, yes, it's going to be greater than 1 because the ROI is going to be greater than 1. Meaning a lot of these stakes that are coming out at this point in time are going to be greater than 100% probably. Now, how can we even think of that? Well, let's see. Let's say, whatever, it doesn't matter the staking amount, right? Let's say it's 5,555. And let's say at that point in time, let's give it $300 just to be conservative at the end of year 15. Okay, so what does this calculator say? This calculator, hexcalc.net, is basically the same thing as go.hex.com, except that it gives us a projected earnings table down here to play with. And it gives us the methodology right down here. And it has updated methodology. It actually alters the daily payout average that he uses over time to reflect the most recent payout, which is interesting, right? Because that's reality. Well, you know, we got to keep it conservative, Wally. We can't be too overbearing. We can't be too bullish, right? So at the end of 15 years, right, we're going to have, according to this, right, the interest is going to be 68,000 hex, and you only put up 10,000 hex. So this is the power behind a max stake, just in hex terms. Okay, just in hex terms. This is cool. And here it tells you what your APY was, right? Now check it out. Because at $300, that's 23 billion. For something that's $1,800, right? I mean, 20 million, excuse me. 23 million, 23.6 million for something that's only $1,800 right now. Now, I'm pretty sure you can see what the ROI is here. And like, right, we can take this to a Kager calculator just to give you the annual percentage, right? Because that's how people look at these things in the so-called real world. Where to go? They look at the Kager. Well, how'd you do on the Kager basis? Blah 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 blah. Oh, it doesn't let me do it by the percentage. Okay. Let's go with 1800 and 50 million. Number of periods 15. What? Okay, just doesn't want to work. Let's find another one. I'm not gonna do math on this one. Somebody's gonna do it for me. Cause I hate doing Kagas. Let's see if this one will work. 23, 6, 15 years. All right, there you go. 88% Kager. It means compound annual growth rate. This basically means that your annual growth rate on a yearly basis was 88% in dollar terms, which is pretty freaking good because there's no hedge fund manager that's ever done that. And all you're doing is what? What are you doing to achieve that rate of return on a compounded annual basis, right? And this is the important thing that we need to understand about staking, right? I mean, come on. Are you kidding me? You can't do that trading. You cannot do that trading consistently year over year as a human being, right? Even programmable bots cannot be that successful, right? Like it cannot. So here we're taking into account some real basic math, right? We're not even taking into account the fact that over this period of time, starting today, right? This is going to end. Where's the end date? November 8th, 2036. Okay. November 8th, 2036. Now, this is important. Please pay attention. HEX.VISION, where are you? November 8th, 2036. As you guys can see, this is November 10th, 2036. So after all of this time, now we're all the way back here now. Not even. Hold on. What is this? August 2021? Well, all the way back here, okay, guys? All the way back here. And as you can see, the cumulative expiring shares, which is this burgundy area that's highlighted in the background here that has an increasing slope, okay? That's cumulative. So that's what's expiring as time progresses, okay? Now, interestingly enough, that looks similar to something you've already seen, right? It looks like that log-based 2 graph. It looks just like it, right? It takes the slope. Interesting, no? So, all right, I see an interesting question. What happens if a dollar collapses in 15 years? What would the base value be off of then in that scenario? Don't know. But if the dollar is no longer in stand-up mode, I think the least of your concerns are going to be what the value of HEX is. I mean, you have to understand, in a Mad Max scenario like that, digital stuff is either going to exist or it's not. And if it doesn't, then nothing is going to work, including cash. So there's going to be barter. That's what's going to work, right? So in that case, guns and butter, right? Guns and ammo, right? Food, clothing, material, physical objects that humans actually will need, right? That's what is actually going to be of value in that scenario. So I think that you're discounting the facts of what would happen in that kind of scenario. If the dollar is no longer currency, that would lead to me to assess two geopolitical scenarios. Either the U.S. is no longer the U.S., meaning it has been overran and who knows what the hell is going on, or we have failed to maintain our standard of living here and America's overrun by the commies for real and SDRs take over. Right. And if that's the case, then I don't know what to tell you, but you got bigger issues than what happens if the dollar collapses at that point, because that means that they won. And that's what we can't have. So anyways, back to this. So as you guys see, the more shares expires, right, over time, you can expect, hold on, where the hell did this thing go? You can expect that the T share rate, right, is going to continue to climb over time, right? And with that, the quantity of HEX required to acquire a T share as well. And with that, the cost to acquire a T share as well, right? And then with that, the T share is always going to continue to pay out more HEX per T share because that's what it's designed to do, okay? And then taking all of that into account, we know the system is providing value daily, right? And that value is steadily increasing over time, okay? In trading, you don't have any of these properties whatsoever. It is you taking single individual momentary decisions over time, which lead to decision fatigue, which is a real thing. It's a very real thing, okay? And what decision fatigue is that, and it used to happen to me all the time, I would start out the day making 2 to 3 great trades. By the time the day ended, I maybe did 2 to 3 trades more, and they weren't great. Just simple mental exhaustion because you don't realize all the processing that your brain is actually doing to assess a situation. And it was the same thing when you found yourself in a lot of stressful scenarios, stressful environments, because that's what it takes. It takes mental focus and mental acuity to sit there and really bang out those shots, trade after trade after trade after trade after trade. It's not easy. It's not easy whatsoever. There's a reason that statistic of 99% traders fail being the case. Is because of decision fatigue and people not understanding that, right? It's kind of like when you're playing a sport, right? If you've ever played football or baseball, excuse me, those are the only 2 sports that I've really played in an organized fashion. So those are the only 2 that I can speak to experientially. If you've ever played baseball or football, there comes a time where you kind of hit a wall over time, right? And you need something to knock you out of it, right? I mean, and it's called a slump or whatever, right? Like I know for me personally, when I played football, I could never react quick enough until I got knocked. Until I got knocked, that's when I would like wake up and then I could actually play football. But I needed to get my upside knocked. That's just how I was. I don't know why. That's how it was. In baseball, when you're batting, right? It's a series of individual events that over time provide an average of your batting experience, right? But each individual batting instance is separate. Your state of mind could be different. Your state of emotion could be different. Your, frame of thought could be different. All these different things, right? And it's actually basketball, similar thing when you're out there taking free throws, right? You're taking shots. It's the same thing. It's all about the series of events over time, right? When you have to deal in that arena, right? When you're taking shot after shot, swing after swing, pitch after pitch, right? Even in tennis, right? Volleyball, pitch after pitch, right? Lob after lob, right? It's the same scenario. You run into fatigue of doing the same motion over and over unless it's muscle memory and you don't have to think about it, right? Just what it is. Even when you're batting and you have to depend on muscle memory, your body goes out of whack for a certain period of time because it needs to recalibrate. You get older, you age, and guess what? You have to adjust. And this is what's hard for people to understand about trading. When you're staking, you remove all of those negative elements because guess what's happening? What's happening is that over time, you're buying into this average. This is the all-time average, okay? And this is another way of looking at it. And thank you for the super sticker, mix, aka Jaso. Appreciate that, man. Thank you very much. Um, but this is important, right? Because the system is literally propagating value daily. It's printing it daily. And that's what we're seeing. And it's important that we understand that, because that's going to be a big function of our staking strategy, right? Because price is always going to do what it's supposed to do, because the system is always going to generate value. And let's not forget the most important thing about price and the T-share rate. Price and the T-share rate, or the dollar cost of a T-share, excuse me, are correlated to the tune of 99.99%. So that means as long as the T-share rate continues to go, guess where? Guess where? Right? Because it does this all the time. As long as it continues to go up, the quantity of hex required to obtain a T-share is going to go up. Right? So that's something you have to take into account when you're thinking about, how am I going to beat this? Because this is ultimately what we're talking about here, assuming the dollar's around, because this is all based on dollar return. This is a time-weighted dollar return, not a dollar-weighted return. Okay, this is a time-weighted return. Distinct thing. So we're trying to figure out why staking is better than trading. And I've already explained all the downside elements of what happens when you run into decision fatigue, right? Making 10 decisions a day on the same action is not as easy as it sounds when you're trying to hit a moving target. And that's what decision fatigue is all about, right? Let's see if, let me get, all right, let's get a trader's market up here. Not Bitcoin, something with no scam wicks. All right, let's look at E-minis. Let's look at them 13 minutes. Now, this is a very nice one-way market, right? I mean, look at how easy it is to trade right now. That's the power of what you get when you have the right tools, right? It looks very easy. But you guys got to realize it's been a long time refining this shit, so it should look easy, but it's not. Because the reality is that in real time, you're going to be looking at all these indicators, and if you don't understand them, they're going to trick you, right? Because a lot of people, when they're trading, they're not looking at it like this when they're day trading, right? They're not keeping in mind that the trend is up at all times and that this is the big picture. They're taking a look. Short term, all right. Looks like it's gonna go lower. All right, looks like it's done here. Let me short some here. Then it goes up against them, and it goes up like what? That whole candle's 3 points. You know, maybe that person has a 2-point stop, and they just short at the wrong point in time. Excuse me, and then they end up eating those 3 points, because that's $150 in this contract. Somebody might not want to risk $150. See? And it's a whole bunch of series of events like that. That while and it's microscopic, right? Like that was a 21-minute chart. This is a 5-minute chart. But you got to realize people make decisions based on this small microscopic time frames. In reality, and this is why people lose money, because they're not looking at the big picture. Excuse me, they're not looking at the big picture, right? And I used to make all these mistakes. This is how I know. How else would I know, right? So, and then you talk to other people and you hear what they're doing, and then you realize they're doing the same thing. And in fact, when you see people in finance talking on Twitter finance talking, you'll realize that they're bickering back and forth with each other for no reason, because they're talking about different time frames. And again, that's a function of understanding, right? Everybody isn't going to understand what they're talking about. And that's why I wanted to have this little talk tonight, right? Because so this is a whole staking ladder, right? Cool. A whole staking ladder is something that you design after, when you got like an idea of what you want to do, and you're like, all right, I got it all set. I'm good. I figured it out. This is what I'm going to do. And you're going to get your T shares, right? Now, I say if you're going to do a staking ladder, you stake that ladder at one point in time. That way, your T share rate is not fluctuating across time. It's just cleaner. You might lose a couple shares here and there, but I think over time, you'll appreciate the back end of that. Now, why is that? Well, think about it as a daisy chain, right? Because that's the way I think about it. If you're starting at time X, right? At time X plus 1, right? Which is at some point in the future, or you can even say F for future at some point in the future. This 30,000 hex stake is going to turn into something, right? And you're going to restake some of that hex, whatever it ends up being, right? And the only question you're going to have to answer is, well, where am I going to restake that principal or that hex or whatever you want to call it, whether it's the principal and the interest if you decide to restake everything or not, right? The question becomes, well, where are you going to place that again? Because now it's done. Not only did you just have to mint additional hex, you also had to give up your T shares because that's what happens at the end of the stake, right? So my whole idea is what are we actually thinking about after our first stake is over, right? And we kind of have to think about that when we set up our stakes off the rip, because what I realize is that a lot of people, when we were talking about this stuff at the beginning, we didn't take into account new people coming in to stake and why it's still beneficial for them and why they should still stake. Because look, if you're staking, if you're entering the system now and you only got a 10,000 hex bag and that's all you can afford right now, and you really want to make a 555 stake, which is only going to get you 1.62 T shares, well, you now can go to hexcalc.net. And let me put this in the chat because it's important for people to just know. What's going on, Bree? Hope you're doing well. You see, with a conservative estimate of $300, 15 years in the future, I mean, come on. You already see how Hex moves. That's extremely conservative because we're at 18 cents all the way back here. This is August. So let's say 2000 by the time that comes around is more realistic. But whatever, we're not here to talk about that. Point being made here is you're making all this interest, right? And of course, this is just, let's do 3 years. That's 1,000 days, right? Boom. Let's lower that value. Let's make it $30. Okay. All right. So now you got 15,000 hex to play with versus just 10,000, right? But that was 30,000 hex. So let's change that amount. Okay, so you got 45,000 hex to play with now. So then the question becomes, well, what do you drop that 45,000 hex? Right? What do you do? And that's kind of what this topic is about in a lot of ways. Well, it's a little bit about everything, right? Because everything is topical. But then it's like, well, why would you stake another 555 again? Well, it's because of math, especially when it's a stake so small, right? And the reality is that the math makes sense. And this is the main thing I would like for new folks to take away from this stream, if nothing else, is that once people like me and those that came around the time that I did and a little bit after, and all of those that came before me exit the system, right? At this point in time, basically, August 2036, June 2036, like I came in the system November 2020. October 2020. I didn't make my first stake really until November 1st, 2020, because I didn't know, right? Like I hadn't figured all that out yet. So November 1st, 2035, right? It'll be when that's 15 years. Or 2036, sorry. That's 15 years, right? So that'll be when my first 15-year stake ends at that point in time. So at that point is when my Genesis T-shares will come out. So at that point is when you're going to see the T-share rate rip even further after the 10-year mark. So not only are you going to enjoy one major boost, thanks to the inflation that the system's going to generate, you're going to enjoy two, right, at the end of that 15-year stake. Now, that's just one way of viewing long-term stake, right? You can also, right, take this, do it in a month, and just break it all down the same way, right? Now, of course, the payout isn't going to be as big because you're working with months now, right? Now, when you're working with months, the system isn't as nice as far as payout goes, right? But it's really about understanding, again, what exactly you want the system to do for you. Now, this is basically 3 years, right? Because 365 times 3 is 3 years, and that's, 1,100 days. So that's a little under 3 years, right? 95 days short of 3 full years, right? There you go. Now you know, right? And that's just one of the many, though. So I don't think you're going to front run anything. Because here's the whole point I'm trying to make, right? While I wasn't very specific about like strategy types, right? I was very specific about what you need to take into consideration when you're debating your strategy, whether it's by yourself or with a colleague that you discuss HEX with, right? Because you have to understand what you're giving up, because T-shares are fleeting. That's the most important thing. We're not counting T-shares here, but we're counting time. And T-shares encapsulate time. And that's why we're talking about this, right? You can stake 180 days and then stake the interest 555. Yeah, but it depends. Like, again, like you can do whatever you want, but you have to understand what you're doing, right? Because if you're only staking 30,000 hex for 180 days, you're not getting much for that, right? Let's say that thing is at $1 at that point in time. Let's say $1.50 just to be gracious, right? Right now it costs you $5,500 for 30,000 hex, which is crazy to me. But at the end of the stake, according to the math, if it goes up to $1.50, will be at 48K, right? Right. So the question becomes, well, what are we doing with just 2,000 hex? You're not doing much of anything. It doesn't sound like a lot, right? But let's see. Because again, it's just about the math, right? And let's just do a meager 300 hex. Now, I don't know about you guys, but $4 million sounds like a lot to me. 5 million, right? Pretty crazy. So, all right, I got a minute until Joe starts. I don't want to run into his time. But I hope that this was helpful. I really wanted to highlight the importance of T-shares, how you need to view them, how you need to think about them, because I gave you how I think about them, like what I think about, what I take into consideration. And it's just about the simple fact that we are not always going to be able to have T-shares. So you really need to take good care about the decisions you make, whether long or short, right? Because the beautiful thing about HEX is that it gives you this optionality, right? Years or months. And the system is going to work the same regardless. It's just going to scale back what you get, right? 1,600, 16 T-shares versus 8.5, right? And that's just a function of reducing your stake, excuse me, by approximately 12 years. So you only lost 50% of your T shares, but you gave up 75% of that time, basically, right? That's a fair trade, I think. But, 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 you're only holding those T shares, right, for 3 years, right? And that's the important thing to understand. That's the whole topic of the conversation here, right? 3 years isn't a long time because then you gave up those T shares after that. And we already discussed how the system is going to scale those T shares down. Okay? So you guys go over, check out Joe. He's streaming on Discord Syndicate Network. Who is he? I know he's supposed to have a good one today. I can't remember who he's with. Damn, I can't see the name on the email. But go check him out, guys. Head over to Discord Syndicate. Let me find the link so I can put it in the chat so you guys can hold over there right now. Where is it? Why is it not populating? Jeez. Come on, YouTube. You're just sucking. Hold on, guys. Where is it? Where is it? Where is it? Why am I not seeing it? Yes. Here we go. All right, guys. So thank you guys for tuning in. If you guys got any questions on the back end of this, definitely reach out. You guys see my what do you call it? My website on here. My handle on Twitter is just like you see on the screen. At Wells Only with the number 1. Let me fix that because it actually is written incorrect. Telegram, t.me/Wells Only, no 1. You can also sub on YouTube, youtube.com/Wells Only. And follow me on Twitter at twitter.com/Wells Only and number 1 again. And thank you guys for watching, man. Go check out Joe and one of our greats from the Twitter universe in the Hex community. He's a great guy. You'll get all his information over there. Please check him out. And thank you guys for watching. Appreciate you.